This conference will now be recorded.
Hi, this is Julie at InsMark, and I am going to spend the next 40 minutes or so going over the input that you need to take to create a basic presentation case in the InsMark illustration system. I will first show you how to copy and paste policy data from a PDF file. Then I will walk through the input that you need to complete to create illustration of values, dollars of benefit for pennies of cost, which is a discounted dollar concept, and then a buy term and investor difference comparison, and various financial alternatives compared against the IUL. So first you need to have a policy ledger made and ready. This would be something you either create and saved as a PDF file, or you get it from the home office. The example that I'm going to use would be here. So this is the PDF file. You right mouse click on it and you get a drop-down menu. Make sure you select Open with Adobe Acrobat Reader program. Don't use Adobe Acrobat Professional or some other version. Make sure you select Adobe Acrobat Reader. Right mouse click and select this. And now this is the policy. It's for a 45-year-old, and premium is about $15,000 for 20 years. And then you get the cash value, surrender value, death benefit, and also withdrawals and loans as retirement income. These are the basic policy data that I will copy and paste into the InsMark system. This method works for any policies from any company as long as you have a PDF file or Excel spreadsheet. Okay, so open the file using Adobe Acrobat Reader. Next, you open the InsMark system. So find your InsMark system shortcut on your desktop, double click to open, and you're going to get this screen. Select InsMark illustration system, and then you're going to get a quick start menu. So select this one, create a new client workbook, because we're doing a new case from the very beginning. So create new client workbook. OK to go to the next step. So the client workbook description would be usually the insured's name. So my sample case has a made-up client whose name is Robert Lee. And so the client workbook description, the name of the case, you would normally just use the insured's name plus maybe a date of the of the time of the date when you create this, and it helps for your future times when you need to go look for old cases. It helps identify the case when you have built a lot of cases in your system. So Robert Lee, September 2018. Click OK to go to the next step. So I'm going to be doing illustration of values, dollars of benefits for pennies of cost, and then permanent versus term, and various financial alternatives. These are the 4 illustrations that I want to create, and they're all located under Personal Insurance tab. But before you move on to do any of these illustrations, you need to make sure your insurance source data is loaded. the system shows up by default the prior case. But, obviously this guy is not Tony Callahan. I want to do a case for Robert Lee. So you need to make sure you click on Create New. Source data, Create New. And now you open up the source data storage file. So remember, you are here, you click on New, you bring up the source data storage file, and you need to get that insurance policy, this policy, copy and paste it into the source data area, okay? So when you have the source data storage file open, you need to move to the right side and click on the New button. This New is for creating a new source data, okay? We're not doing a new proposal. We're not doing a workbook. We're creating a new source data. So click on New. And now the case basically means the case data file, source data, okay? And you need to go through these steps to complete the source data input. So you start with insure data. Source data notation, the name of the case. So I'm going to name this Robert Lee AIG. This one happens to be an AIG IUL product. Okay, this is the policy that I'm going to enter into the InsMark system as source data. How long do you want to run the proposal? I'm going to run it till about age 100. So it's 55 because he is 45 right now. So take a look here. His current age is 45, but the year one illustration, which is the end of the year age, shows up on the home office's illustration as 46. So when you do these kind of a manual input, you want to make sure to use this number, to use the same age so it's consistent, okay? Even though his current age is 45, I'm going to show here the age as 46, okay? Name is Robert Lee, and he is male. And this is not a second to die policy, so I do not check this box. Next, we deal with policy details. And that will be the insurance company's name, product name, and so forth. So insurance company's name, you pick customize, and then you can type in the name, okay? American General. Or AIG. Once you've typed in the company name, it gets saved in these drop-down menus. So the next time you come into the system, if you're adding another AIG policy, you just pick from the list. Long product name. Again, you could do customize and then type in the name. Or if you've already used the system before, your prior entry will show up. So pick Universal Index Life. Short product name is IUL. And initial death benefit, you take a look at your illustration. This example shows initial death benefit right here, $321,303. $321,303. Okay? And footnote. I'm just going to use the default footnote that shows up. You can also type in your own custom footnotes too if you have your own text. Okay, just pick one and then you type it in there and it gets saved in the system. but I will just use the default footnote. Next, you deal with premiums and cash flow. Cash flow here refers to withdrawals and loans coming out of the policy as retirement income. So you have premium, you have withdrawals, and then you have loans. So the premium in this case is $15,000 for 20 years. Okay, so he's paying into the policy until age 66. So I'm going to go directly in the column for premium, make sure it's cell 1, and then I just type in 15,000. Now he has premium payment for 20 years, and I don't want to type 15,000 for 20 times. All you do, you just type 15,000 and make sure you move down to the cell underneath it, and then use the equal key, which is the same key as the plus key on your keyboard, the equal key, and I just push the equal key to repeat the same number. It's a very fast way of doing input. So I've got from year 1 to year 20, okay? And take a look at the illustration. This is the first 19 years, and then it shows here under net outlay, there is this negative number, which is really the withdrawals and loans coming out of the policy, starting at age 66, okay, and continues until age 85. So that's the retirement income coming out of the policy. And notice the Home Office's illustration puts the income distribution under net outlay as negative numbers. In the InsMark system, we have a separate column for that, so make sure you do not use negative numbers, which is right here. Okay, withdrawals and loans. It's really a lot easier if you just put all of the income cash flow under the loan columns instead of showing some years here and then the rest down here in the loan column, because our system actually will treat any income out of the policy just as retirement income. It's not going to tell you this much is withdrawal, this much is loans. So make it easy for yourself. Enter all of the income distribution under the loan column. And this is 65723. Okay? Make sure you do not enter negative numbers. On the Home Office's illustration, it has negative numbers because it's listed together with the premium column. So positive in the column by itself under loans column 65726, and it's going to continue until age I believe 80, or it's from year 21 to year 40, so it's 20 years of income distribution. So all you do, make sure you're under the cell that you want to repeat the numbers and use the equal key. Let's see, this is till age 85. So from year 21 till year 40, this is the income distribution. So we completed the premiums and cash flow. Everything entered in the cash flow, retirement income distribution, enter that under the loan columns and as positive numbers. The last input would be dealing with accumulation value, surrender value, death benefit. And we are showing accumulation value and surrender value. So it's two cash values. Sometimes you may just want to show one cache value. You select that, and one column gets faded out, so you just enter the cache value, the one cache value under one column. But here I want to show two cache values, and I've got 3 columns. And I'm going to now go to the PDF file and copy and paste those data in here. So starting in year 1, there is these 3 columns of numbers. So I'm going to push the Alt key, Alt key on the keyboard with my left hand, and see the cursor becomes a box. Okay, so Alt key, push it down, keep it down with your left hand, and then draw a box over these 3 columns of data that you want. And now you've highlighted all 3 columns, and release the Alt key, put your cursor in the highlighted area, right mouse click, and select copy. Now you've copied all 3 columns of data onto your clipboard, and they are ready for pasting. So you go to the InsMark system and click on the first cell of column 1. Okay? Make sure it's in year 1, the beginning cell. First cell of column 1, highlight it completely blue, not like this, not like this, but make sure it's completely blue. If you happen to get a half blue or a blinking cursor, all you need to do is just click somewhere else and then go back to the very first cell, year 1 of column 1. And then you go here, click on this little button, which is for pasting. And now you've got 3 columns of data populated. And then we need to go to the second page. Okay, so make sure you click on this. This is now the new beginning cell of the pasting field. So you open your PDF file, go down to the second page, and again, push the Alt key, Alt key. You don't want to miss this year, so make sure don't start here, but start here. Alt key, highlight these 3 columns that you want, release the Alt key, right mouse click, copy, and then go here and paste. Right? Okay? And one more page to go. Go to the PDF one more time, scroll down to the 3rd page, and again find these 3 columns. Alt key, push it down, highlight the 3 columns that you want, release the Alt key, right mouse click, and copy. And now you go here and make sure it's the first cell of the pasting field. Paste. And you are done. You've got your policy completed. Click OK to save. And you notice we're now in the source data storage file, and this policy was just created by using the copy and paste method. Okay, this is something that was just done, and now you can actually review it. This is the policy that I just copy and pasted from that PDF file, and now it's saved in the system. Make sure it's highlighted blue, which means it's selected, and then you click on OK. You're going to move back to this very beginning screen. So click OK. Select the policy by clicking on it once and highlighting it. Click OK. And now see This is the source data section that shows you it's already loaded with that new policy. And here you can also review it. Okay? Now we're ready to do all of these cool illustrations like illustration of value, discounted dollar by term and invest, the difference, and various financial alternatives. So you do one at a time, starting out with the simplest one, which is illustration of values using this policy. So select and OK. And now we're in illustration of values, and we just need to complete basic data and cash flow, and you're ready to see the reports. How long you want to illustrate, you can show for 55 years, which is going to be till age 100. You could also cut it shorter if you want, till age 95 or whatever. But it shows up with default, whatever number of years that you have in the source data. Okay, so what's the guy's income tax bracket? I'm going to use 33 here. This is not an employer-owned policy, so I do not click here. Okay, and now down here, there is a little area for you to select to include rate of return columns. If you do not select these, if you deselect it, leaving them blank, the policy illustration will not have rate of return columns. But if you do, you can add them. And then you need to pick either the gross rate of return or net. So here, I'm just going to use a net ROR. Cash flow, that's the 65723 withdrawals and loans. I'm going to show as retirement income net loan proceeds. Majority of the time, you probably want to pick this, okay? So go to report selection and click on use system defaults. And it's going to select those reports that we recommend. Obviously, you can add more reports if you want. But for the time being, I'm just going to use the system recommended set of reports. And you can add a cover page. Put your name and the phone number and, pick a cover page graphic like this one or some other ones if you like. Okay, so that's report selection, add a cover page, and back to select your reports, and you can preview now. And you get this kind of very simple and concise illustration of values report. And it shows you premium, income distribution, cash value, accumulation value, and the rate of return. Surrender value, accumulation value, surrender value, the rate of return, and death benefit rate of return. Okay, and so on. So that's the illustration of values. Click on Done to save. You got your first proposal made for Robert Lee. Okay, so that's the illustration of values. Now I want to make another proposal for him showing discounted dollar concept. So under proposal, you click on new because you're going to do a new proposal. It's going to be proposal 2 using the same policy. So go to proposal and new. And this is the same policy, right? Instead of doing illustration of values now, I'm going to select dollars of benefits for pennies of cost. Okay, to go to the next step. Again, this is very, very simple. How long you want to run the proposal. Tax bracket is 33. It's okay. It's showing the input from the prior input. So if that's the same, you just leave it alone. If not, you change it. But we're doing the same case for the same insured. So these data are really exactly the same. And the discounted dollar basically is going to ask for a display option regarding the premium's earning power. So if you can ignore it or you can add this, include a calculation for foregone interest on the premium. And the interest, you do need to put it in, 5%, 7%, 6%. So let's say I'm going to use 7.5. So assuming if the client didn't buy the life insurance, his premium money is going to earn this kind of rate of return. Okay? Proposal heading, you could customize it or you could use the default text and you're done. You go to report selections and again use system defaults and you can take a preview and it shows you a different cover page, preface, text introduction showing the pros and cons of an insurance policy. And now we've got, again, the same policy, $15,000 for 20 pay. This is the what that 15,000 would have grown to if you use the 5% foregone interest. Okay, and it shows you basically for every dollar of the death benefit, the client only spends this kind of money for the premium. So this is dollars of benefit for pennies of cost. And so on. So this is the dollars of benefits for pennies of cost. And cover page is always located under report selection and at a cover page. And back to select your reports, click on done to save. And you see you just created the second proposal. Okay, so we're going now to go do a buy term and invest the difference compared against this IUL. So again, you go to proposal and click on new because you're going to now create proposal 3. So click on new. Same source data. It's already loaded because we're using the same policy. Okay, so you don't need to click on create new. Just move down now to permanent versus term. So we did illustration of value, dollars of benefits for pennies of cost. Now we're going to do permanent versus term, buy term and invest the difference comparison. Okay, to go to the next step. And now the input is going to be a little bit more complex because now you need to deal with the investment alternative, the term insurance, and so forth. So you first do basic data. We're going to illustrate for 55 years, tax bracket 33, that's fine. And this zero balance in an alternative investment is a good default setting. So just pick this one for now, okay? And we're now ready to deal with the investment details. So the policy is $15,000, this IUL, for 20 years. And if he buys the IUL, he gets this kind of retirement income and cash value and death benefit. But if he didn't buy the policy, if he didn't buy the IUL, he could spend a lot less money than this on a term policy and invest the difference in a side fund. So the investment details deals with the side fund choice. And you pick from the list. Okay, you click on it, you get a drop-down menu. You can always pick Customize, and then you can name your own account by typing over it. But here I'm going to just pick an equity account because it's an IUL policy. An equity account might be a really good alternative to compare to. So you select from the drop-down list. These names are already kind of showing up. If you pick Customize and you type over it, maybe, Schwab account or brokerage account or whatever that you want to name. These short names are going to be blank because you're using a customized choice. So make sure all the text is, all of the boxes are showing the correct text. So you need to be very careful and look at all of these little input fields. Taxation. Also, you need to make sure you pick the right category, okay? Because sometimes people might pick taxable, but if it's a mutual fund or a brokerage account, the tax treatment will be different for a taxable vehicle versus an equity account. Equity account is also taxable, but it is specifically taxed at the capital gains tax rate. Okay, so make sure you pick equity account. So when you use Customize, it gives you a lot of flexibility to basically name the account to the one that you want, to be exact, to be highly specific. But then you need to make sure all of the input field is selected correctly. If you pick from a pre-made menu item, for example, an equity account, see here, this part is already filled for you, so you don't have to worry about these. It's already selected, and the short name box is already kind of populated, and all of these are done. You basically need to check on the fees, capital gains tax rate, and so forth, okay? So the growth rate, let's say I use 7%. Now, under the growth rate, you also have a schedule input field. If you pick this one, and click on the schedule button, you're going to have the ability to show various yield in any of these given years. So it could be 5.68%, 6.75, and then so every year could be a different number, or it could be, the same rate of return for so many years, and then it's going to drop for maybe those years when there's a crash in the market where people actually lose money. So you have a lot more flexibility if you pick schedule, and you can copy and paste S&P 500 historical rate from the last 30 years, okay? And that would be the actual rate history that's used to predict what's going to happen in the future. And then once you copy and pasting, let's say S&P 500 30-year performance in here, you can store it so you don't have to keep on copy and pasting a rate history in there. Okay, that's how you do it. But here I'm just going to use 7%, like an average yield for the next 55 years. And management fee, I'm going to use, let's say, 0.75%. Capital gains tax rate is going to be assumed to be 20%. It could be higher or maybe lower. Dividend, I'm just assuming to be 0, okay? And then portfolio turnover rate, I'm going to assume 50%. So these are all the input that you would use, that you would complete based on what you feel is the reasonable, realistic assumptions. This is dealing with an equity account. It's got a lot of little boxes. If you pick a taxable account, the input is going to be a lot simpler, okay, because there's none of these. It's just assumed to be a kind of a bank account or a money market account where the annual interest is going to be taxable, okay? So for example, if you pick any taxable investment, you just type in the yield and all of these are faded out because it's not applicable to a taxable account. So I'm going to go back and pick an equity account, okay? And management fee like this, these are okay. And next, we deal with term insurance. Remember, this is a buy term and invest the difference comparison, so you do need to tell the program what the term scenario is going to cost. So in the term insurance details, you could either import a term policy or you could enter the term data on the next two tabs. So this is the term cost, this is the term death benefit. Majority of the time, you want to just probably use this option instead of import. Because when you do import, you have to go find the rate per thousand. You have to make sure you copy and pasting the data into the source data storage file again. But usually a term scenario can be a lot simpler because people may just get a cheap term for a few $100s per year for, until age 65. So I'm going to use this. I will enter the term data on the next two tabs. Okay, term rates. So here you do need to have, a kind of a term quote. You could do term rates per thousand. So it could be, 0.5 and 0.7 and so on. You need to enter those. A much simpler way to deal with it would be to input total premium, including policy fee. So make sure you select this one. And let's say this person can spend $400 for a term. This is the actual dollar amount, not the rate per thousand, but the total premium dollar amount. And assuming that he's going to be able to get this for 20 years. So I'm just going to use the equal key now, okay, to age 65. So $400 for 20 years, some kind of a guaranteed renewable term policy, and term death benefit. What's the $400 buying for him? I'm just going to say maybe 500,000. Okay, $400 buying him a really cheap house, really inexpensive, and equal all the way down till age 65. Now you have the option to show term being renewed. So under term rates, let's back up to term rates. At age 66, if you assume that he's going to renew his term policy, the premium is going to jump to be a lot higher, right? So, and, a few thousand and so forth. You have the option to do that if that's what you want to do. But it's usually probably not sustainable as people get older, as you guys know. So I'm just going to say we're going to cut the term insurance. So term rates $400 until age 65, and term death benefit goes away because he's not going to get another term. Okay, so that's kind of the input dealing with the term rates and term death benefit. But keep in mind, you do have the option, if you want to show a client in a kind of a hypothetical scenario, continuing the term coverage. And you just, get a reasonable what the term would be costing, let's say 5,000, just enter those. And then obviously the death benefit here, you would need to show the same amount of death benefit that coincides with the number of years that you have, showing that he is actually paying for the term coverage. So here I'm just going to do this. I'm just going to zero it out. Okay, so term premium paid for 20 years until age 65, term death benefit covered till age 65, and thereafter no more insurance. And you're done. You go to report selections, you can add a cover page, you can use system defaults, and it's going to add these and group these reports, and you can take a preview. And it shows you this is the premium of the IUL, and if the insurer buys the IUL, you get this kind of retirement income, cash value, surrender value, death benefit. And it shows you if they do the buy term and invest the difference, they pay the insurer pays $400 per year for term and getting this kind of death benefit, and he has this kind of money that's going to be invested in the equity account, earning 7%, and this is the value of the side fund. Okay, so buy term and invest the difference, and you see you've got living value compared against the IUL versus the death benefit comparison. Okay, and then concurrently, there's going to be retirement income distribution coming out of the policy because the IUL shows 65,726 withdrawals and loans. So the term side, we're also going to distribute the gross amount, which is going to be higher than this to net this. And you see here by year 30, by year 29, this account is already depleted. No more insurance death benefit, no more side fund. The next page shows you the policy still keeps on going, producing these kind of a retirement income. So comparison-wise, now you've got cumulative spendable cash flow from the policy, which comes to about $1.3 million, versus the investment fund getting less than half of that, and no more remaining value. Okay, so this is buy term and invest the difference. And then we've got all kinds of other reports here. So remember that the client's name is Robert Lee, right? And the cover page somehow has default, showing a lady. So I'm going to change that. Maybe pick this one. You can also not include a cover page. Okay, so these are little details that you pay attention to, and then you want to make sure all of the information is correct, including the cover page image choice. So now we did the proposal 3. This is buy term and invest the difference. It's kind of interesting to see in this study that the buy term and invest difference is really in no way comparable to what this IUL can do. So what I can do is actually show basically client getting free term policy, like term for $1, and see how that compares to this IUL. So since I already made a permanent versus term illustration, I want to actually create a fourth proposal by copying this one and change one thing, which is the term insurance premium, change that to $1. So instead of doing new, I'm going to select copy. Okay, so make sure the one that you want to copy from is selected. So not like this. I don't want to copy this one. I want to copy this one, and click on copy. And I name this proposal 4. Okay, and click OK. So right now you've got an identical illustration, but I want to make a change. And that's how do you change an input? You just make sure the one that you want to edit is selected and highlighted blue. Then you click on the edit button. And the only thing that I'm going to change is this. I'm just going to do a kind of an extreme case showing to the client why term insurance may not be a good option. So I'm going to change the term cost from $400 per year, which is quite inexpensive, to only $1. Basically saying if you could get free term policy and nothing else is going to change, okay? It's still buying him $500,000 death benefit. Only change is this. And I go take a look at the report. And this is now the comparison. $1 of premium, getting them $500,000 death benefit. And you can see it's really not much of a difference. Still, the IUL looks a lot better. So you've got, again, the side-by-side cumulative spendable cash flow out of the policy versus out of the term side, out of the investment account. And next 25 or 30 years, the buy term and invest, the difference side fund still dies. There's nothing left, and you still got this going with the IUL policy. So it's kind of a way to say, even if you could get free term policy, if you do have the cash flow to pay for an IUL, permanent life insurance is going to win. IUL is going to win much better than a term scenario. So this one is permanent versus term. You could do this too. Okay, this is how you edit the proposal name. So I add this to it, $1 term. Okay, so this is how you change or edit the proposal description. You click on it twice slowly, then it becomes editable. This one is $400 term. Okay, to edit the naming of the proposal, don't double click. If you double click, clicking twice fast, it's going to open up the case. Okay, so to change the name, click on it once and twice, and then you can type over it to custom name it. Okay, so we got 1, 2, 3, 4, and there is one more proposal that I want to do, and that is the various financial alternatives comparison. So this time I'm going to go to proposal under the new button. I'm not doing copy this time. I'm going to do new. Okay? And same source data, but I'm going to pick this one now, various financial alternatives. Basic data, I'm going to run it for 55 years. Income tax bracket is 33. And investment number 1. Okay, what kind of an investment? I'm going to pick, a taxable investment or taxable bucket if you want to name your own. This is the same as customize. But here, if I pick from the list, the pre-named list, it becomes any taxable investment, TI, okay? You can enter up to 4 letters. These acronyms shows up in certain reports, online graphs, and so forth. So you want to make sure you enter the right, acronym. And the yield assumption, let's say, is 7%. And because this is a taxable investment, all of the fees boxes are kind of faded out because it's treated as a money market account type where the 7% is going to be taxed every year before the earning gets added to the account value. So every year the earning, that 7%, is going to be reduced by 33%, and then the value added to the account value every year. That's how a taxable investment is going to be treated by the system. So investment number 2, I'm going to pick maybe a tax deferred. Oh, okay, we can do a tax deductible retirement plan asset. This is a qualified account. Okay, you could pick from the list a tax deductible retirement plan, and then short name automatically shows as TDRP. And the yield, let's say it's 7%. And management fee, let's say maybe 0.75. Or, you could always assume 0 too if you want. Premature distribution applies to a qualified account. So if it's before 59.5, there will be a 10% penalty tax, or you could ignore it. Okay? What if you want to name this account 401k or RA? Then you would pick name your own investment, and you name this RA. And make sure the name is correct. Okay? And right here, an RA account is a tax-deferred vehicle. However, it's not the same as a non-qualified tax-deferred like annuity. So make sure you select the right choice, because when it's tax-deferred account, it's going to have the distribution taxable after considering the cost basis. With an RA or 401k, there's no cost basis to track. Everything coming out is taxed 100%, right? 100% of the distribution, every dollar is taxable. So make sure you select the right tax type, the tax category. That's why whenever you use customize or name your own investment, you need to be careful all of these little details are correct. So we've got the RA account, yield at 7%, and this is all correct. Fees and so forth is correct. Premature distribution is also selected. and then you're done. You go to report selection. You can include or not include the cover page, okay? And select your reports, and I do use system defaults. And now you've got these reports that you can take a look. This is various financial alternatives compared against the IUL policy. Text preface summarizing what's unique about life insurance product, flow chart, and here is the comparison page. We are very familiar with this policy now. It's the 15,020 pay, getting the IUL values. And now here we've got taxable investment earning 7% and distributing this kind of a retirement income until it's running out of gas here in year 30. Okay, so RA, okay, this is the tax deductible retirement plan. This is the net value in the account, and you can see this one still got money left after distributing this kind of a retirement income. Equity account actually kind of, dies out here too. So next page. So the IRA actually lasts a little longer, okay? We've got other detailed backup reports now, and it shows you what's going on with the equity account if people select to invest in the equity account. And here is the IRA money, and it shows you the pre-tax contribution into the IRA. So remember, the premium for the IUL is $15,000 for 20 years. But if people were to select an IRA or 401k, they would have the money going into the account on a pre-tax basis. So $15,000 grossed up would mean $20,388. This is the amount of money that's working in the IRA, okay? And obviously here, when the distribution starts, you would have to distribute a lot more than this. This is the net value. And let me see, there should be a report. Taxation of cash flow. It's this one. And it shows you out of an IRA account, you will need to distribute $98,000 to next 65. So let's see, any taxable IRA. Click on the Done button to save, and you've got all of the cases done. So here, there's a little problem with the naming. I want to name this proposal 5, actually, right? So we've got these 4 cases done. Okay, so assuming you've got all of these individual proposals completed with those reports that you do want to include all checked, and this is all good to go, you've got now 5 sets of reports. When it comes to printing the reports, you could print individually 5 sets. However, if you don't want to do it this way, it's all for the same client. You're just showing to him from different angle what's valuable was the IUL. So you could actually do one report including all 5 of these proposals, or maybe 3 or 4 of these proposals. And this is how you print. You print the workbook instead of print the proposal. Okay? So the proposals are 5, but they are all included in one workbook for Robert Lee. And if you want to email him a PDF, including multiple sets of reports as one file, you just print the workbook instead of printing the proposal. Okay, so print under workbook, and now you select those. So I'm going to add, and out of the 2 by term and investor difference, I could actually probably just do the $1 one just to show him. And then under the workbook print, you can also add a cover page, which is going to be the one cover page in front of all the individual proposals. So let's say I pick this one. And you can type these names, okay? This is obviously not a good cover page title because it's a lot more than life insurance, term insurance, and side fund. So I could do a new name, retirement planning, right? Like this, okay? And then your name, the producer's name and phone number and contact information will show up here. And next you click on Organize Your Presentation. And you can add a table of contents, add section pages, and then you can preview. You're going to get a big file because you've got multiple sets of report all included in one, okay? This is how you organize your printing job. So having all of the relevant individual proposals organized under one file. And you can preview this. See here, it shows you discounted dollar, illustration of value by term for $1 versus IUL, IUL versus various financial alternatives, and so on. So you have all of these reports, and you can PDF. You can also print to PDF by clicking on the print here, okay, and save. Like when you click on print, you make sure print to PDF is selected instead of print to the printer. Okay, print to PDF, page, 1, 5 out of 60, and so forth, and print. This is creating a PDF file now. And you can save this, Robert Lee, IUL presentation, IUL. Save to a folder. do it one more time, print. Okay, I'm going to save to my desktop. Let's try this one more time. I got an error earlier, so let's see what happens. AIGIUL. Okay, so even though the error pops up, I'm able to create this PDF, which is now including all of the proposals that I have created. Okay, this is the PDF file that got created. So that error about printing to PDF sometimes pops up depending on your computer setting. I don't know what's going on with my computer, but sometimes I get that. But if you ignore it, it just doesn't seem to interfere with the functionality. So I've got the case completed from beginning to end.